And a good Sunday afternoon, everyone. The time is now 1:05, and you're listening to The Real Estate Show. I am your host, Terry Kilakos, chartered mortgage broker and president of Northeast Mortgages, as well as founder of the Northeast Group of Companies. Joining me, as usual, we have my beautiful co-host, Helen Akrivos, chartered real estate broker and president of Northeast Realties. Welcome, Helen.
Thank you, and thank you for throwing in beautiful all the time.
Listen, you
it's
know
like our
what?
Beautiful weather.
You're not only beautiful on the exterior, but you're a beautiful person on the interior. So why not? And yeah, as you mentioned, we have a deluge happening outside. You know, as I was driving in, I could have sworn that I saw an arc coming down Resale. You know, it was big.
This is Montreal. We have to be adaptable. We're tough.
I don't know.
Just like our weather. It's crazy.
I'm seeing, like, we're right here on the corner of Resale and Papineau, and I'm seeing like animals walking 2 by 2 here, and I don't know where they're going, but it's not
crazy.
It's not looking good out there.
Hopefully everybody's tuning in on this rainy day.
Absolutely. Today we're going to be talking about investing in Montreal real estate. Buying real estate is a very lucrative way of increasing your passive income and your net worth. And today we're going to be looking at what you need to know before buying an investment property and how to know if you're getting a good deal in this crazy hot market in Montreal. Don't forget, you can always join the conversation by calling in with your questions at 514-790-0800 or texting in to 514-800. You can also watch and comment on Facebook Live Facebook Live, which is Northeast Mortgages. You go to our Northeast Mortgages Facebook page. You can watch the show live, or you can visit us online at northeastmortgages.ca or northeastrealties.ca. I think I got what Dan had, like, because he was stumbling a couple of times. He had like a little like.
I think Dan gave you the giggles.
Moment. Yeah, he did. I was cracking up with that last comic that he had on. And if you haven't done so already, please don't forget to subscribe to our YouTube channel, which is newsonthego.ca. And before we kick off with our market update and a couple of other things, it's important that you guys all understand that Eleni and I both walk the talk. So I was a real estate investor before I became a mortgage broker, and Eleni, you as well were the same thing. You were a real estate investor before you became a realtor, correct?
Yeah, it's what probably I guess got me into going to real estate school and getting my license.
Absolutely, which was along the same lines for me, except it wasn't me that signed me up to real estate school. It was my beautiful wife.
There you go.
So yeah, it was very cool. But before we really kick off the show, let's look at a little bit of a market update. Last week's federal election left us with a minority Liberal government, but the popular vote shows that the Conservative Party actually got more votes than the Liberals, which makes for quite a divided government and country. The Liberals got 157 seats with 33.1% of the popular vote. Conservatives got a whopping 121. That's actually up from the last election. They have 34.4% of the popular vote, which, Scheer just didn't stop with it. I mean, he was just hammering that. The Bloc Québécois got 32 seats, 7.7% of the popular vote. NDP 24 seats, 15.9. NDP lost huge. The Green Party got 3 seats, 6.5% of the popular vote, and the Independents got 1 seat at 0.4% of the popular vote, which is pretty cool. I'm interested. I hate minority governments, but the Liberals did make some promises about what they were going to do with stress tests and what they were going to do with the first-time home buyers incentive plan. Let's see.
Yep.
If those promises actually come to fruition. I don't know.
Well, I mean, it's one of the main topics, right? Housing affordability across Canada.
Yeah.
And I think prices have gone up everywhere. And now, of course, Montreal is in the news. That's what we're going to be talking about today, whether it's a good time to invest or not.
Which is one of the big things we're going to talk about as well.
Yeah.
Absolutely. Yeah. Housing affordability. I mean, it's literally wondering, where's this going? How high can it go? Are we in a bubble? All these things kind of keep coming up. This week, the Bank of Canada is highly unlikely to cut the overnight rate. We've been talking about how they might be cutting the overnight rate. They might not. It's very unlikely that they will cut it because, as we have explained previously in the show, if you look at where inflation is and where the overnight rate is, and if you do like a small little calculation, you'll actually is hovering in negative territory, even though it seems that it's positive, which is 1.75. Inflation is at 2%. You subtract 2% from 175, takes you to a negative 0.25, excuse me. So I don't think the Bank of Canada is going to be doing anything for the foreseeable future and actually see inflation take a little bit of a surge with no sign of letting up anytime soon. Big news this week. I mean, this was all over the media.
Well, it's the continuation of, since first quarter of 2019, right?
Absolutely.
I mean, we're just seeing it climb, and we said it in a couple of shows ago. We have broken records.
Absolutely.
Now, Montreal in terms of prices.
The median price of a home in Montreal has gone up more than $20,000 in the last year, according to the Royal LePage's most recent housing price survey. And after recording a 5.9% uptick in the fall, Royal LePage expects Montreal major Canadian cities, which is fantastic. It's a great time to be a Montrealer.
It's a great time to be an investor, right? And so this is, I think, what we're going to get into. If you're buying, is it really good?
Yes.
To be buying now, is it a good time? As an investor, of course you're happy. Your property value has gone up, right?
Absolutely. Absolutely. And you, I mean, which area do you own?
Always looking to get into bigger stuff. We invested in Lachine.
So you took a cash position?
Yes. So we invested in Lachine when everybody said, why are you buying there? Why? Because everything was affordable then, and I knew that it was going to go up, and it did. And so we did sell, and now we're looking to actually get into different areas, probably more outside the city, and maybe bigger properties. Because we started kind of like you did, like smaller plex, duplex, triplex.
Very cool. Well, for me, the first property that I bought was the fourplex in Hochelaga. And, I always make the joke that, I had biker gangs on one side of me, and I had, a crack house on the other side of me. And you know what? That building, I've kept it since 2000, and it's just increased in value ever since. And my rents are good.
Buy and hold.
Buy and hold. I'm a hoarder of real estate. And finally, a little bit more about a market update, and this relates more specifically towards Northeast Mortgages and Northeast Realty. So Northeast has had the privilege of meeting and work across Canada. We host workshops, we attend investor summits, and we are members of many real estate investor clubs that exist like literally throughout all of Canada, and there's a ton of them actually in Montreal. We formed partnerships with many real estate experts and educators out there, and one of the really talented people as far as concerned, and I think you as well, we've had the privilege of working and getting endorsed by Scott McGillifrey. Scott is well known for the host and executive producer of HGTV's Income Properties, and for doing so much, kind of to educate the public and how to make. He shows people really how to make money in real estate. And
exactly. And he's going to be in Montreal, so it's very exciting.
Absolutely. So he's going to be in Montreal next week. He's going to be in Niagara Falls actually this week. We are going to actually have him on air with us in a couple of minutes, where he's going to give us some tips and how he kind of looks at properties.
You guys don't want to miss out. It's going to be great stuff.
Amazing opportunity. Now, you've met Scott in person.
Yes.
What's he like?
You know what? He walks the talk.
McSteamy.
I personally used to watch Income Properties when I was in my 20s, when we were, renovating and flipping properties in my 20s. And so to actually work with him now is a great pleasure. He has such a great network of professionals across Canada, a lot of, a great resource.
Scott's going to be in Montreal next weekend on his wealth tour, and up next we'll get a chance to talk to him and get to take his take on how to invest the right way in real estate. Now we'll take a small detour off to the CJAD Traffic Center.
Are we live? Yo, what's up, Montreal? What's going on? It's Terry Kilakos is in the house, and we got Helen Akrivos.
I think
she doesn't like Helen Akrivos. She wants Helos. But,
either or. Helen is for for people who can't pronounce Eleni.
You're funny. It's like my sister. My sister's name is Kyriakula Kilakos. Okay,
it's hard to say.
Please go out and Kula Kilakos. And call her Kula because it was a cool name. You've got Kula in your name.
Cool.
Kula is cool. And then a few years back, she decided to change it from Kyriakula to Kyria. And I was like, what the F? But, anyways. So I just put the two together now and then. I wonder if she's watching.
So just for you guys, tune in. Scott's going to be on. He's going to have such great tips for you guys. We're going to talk investment. Is it a good time to invest? Good time to buy real estate? It's a good time to buy real estate because, like Terry, we love to buy real estate. But is it really, right? I think it's going to depend on your personal situation. But you know what? There's not one way to do it. That's the best part of it, right?
Oh, yeah, absolutely.
Yeah. So,
yeah, I know.
Lots of different ways to do it.
Yeah.
Not just flipping.
Yeah, so
Right.
I was going to say the same thing. And you know what's interesting? One of the things that I loved about income properties is how they're actually showing you how to convert, like your house, maybe a basement apartment or something like that, how you actually are able to make it into a property that generates revenues. And if you look at Scott and Michael Saraceni's story, what they used to do, this is right back from the days when they were actually in college, right? So they would go out and buy properties with their money that they were getting. I just dropped a little paper. Anyways, so they were buying properties with their money that they were like kind of getting from like student loans and stuff like that, which is pretty cool, and building them up. So I thought that. Are we back? I think we're back.
You're listening to The Real Estate Show, and today we're talking about investing in Montreal real estate and building your net worth through real estate. Joining us, we have on line Scott McGilfrey. Scott is the host and executive producer of the award-winning HGTV show Income Properties. He's the CEO of McGilfrey Group and McGilfrey Entertainment, co-founder of real estate investing education company Keyspire, and an accomplished real estate investor with hundreds of properties across North America. Scott will also be in Montreal next week as part of his wealth tour. He's an influencer, a real estate investor, an educator, and an overall awesome guy. Welcome to the show, Scott.
Hey, thanks for having me.
Absolutely, man. How are you doing?
I'm doing pretty good so far.
How's the weather are you in Toronto right now?
I'm in Toronto right now, yeah.
Is there like a deluge happening over there as well?
We kind of got it last night. It's actually clearing up. The sun just poked out for a little bit, but at least it's not cold. It's decent warm.
All right, awesome. So, Scott, tell us, when investing in real estate, what should we be looking for in a property?
Well, I've been doing this for a while. I started investing in real estate when I was in university. And, there's a lot of different ways to invest in real estate depending on what it is you'd like to accomplish. Most people want to make money, obviously, but there's different ways of doing that. And what I've been showing people for almost 20 years now is the positive cash flow system in real estate investing. It's the buy and hold investing portfolio that, in my experience, and the seasoned investors that I've worked with, that have produced the largest increases and best gains for folks. So the number one thing we're looking for is positive cash flow, meaning the property is generating more income than all of the combined expenses.
Wow, amazing. Okay. And I know they have a different type of property.
And, we can categorize things into at least 4 different. Student rentals was sort of born out of necessity for me because I was a university student struggling to pay my rent. And I spoke to a real estate agent trying to find a rental who actually advised me that I might be better off purchasing a property rather than continuing to rent, because the total rent on the property was more than a mortgage, the taxes, and the insurance combined. And I kind of, ran the numbers, and although I was skeptical, it's hard to argue with the math. I ended up, as a struggling student, using my student loan as a down payment, and I rented the other rooms to my friends. And so my first experience in real estate investing was with student rentals. And I continued to build a portfolio of student rentals from there. By the age of 25, I had 25 student rental properties in my portfolio, and it became my sort of full-time focus. To this day, student rentals continue to be an incredible asset. It takes takes a bit of a unique type of financing and understanding of do student rentals. They're slightly unique when it comes to getting approved for loans sometimes, but once you've got a broker or a bank that will work with you on student rental properties, or you can set up lines of credit instead of mortgages in order to do it. To this day, student rental properties tend to have the most cash flow. But that does come with a little caveat, and I would say that with the extra cash flow comes extra work. There's no doubt that those student rentals require some extra babysitting, perhaps you can call it, when it comes to the repairs, the maintenance, and even just sort of managing the students themselves and maintaining a good relationship with their parents. But if you're getting started, I always tell people, don't be afraid to do a little work and go for the high profit, high margin properties, and student rentals sit right in that category. After investing in student rentals and deciding I wanted to be slightly more passive, meaning I wanted to get some more time back, I started doing multi-family properties, 2 units, 3 units, 5 units, triplexes, fourplexes, up to the fact that now I'm doing 40 and 60 unit buildings. But literally, even if you just have a basement apartment, that's where the show Income Property was really born out of. Born out of the fact that, in my mid to late 20s, I started investing in converting properties into multi-unit, which had a nice double impact. Number one, you have multiple streams of income because you have multiple tenants, which is fantastic, and the cash flow tends to be higher. But it also required a significant amount of renovations, which pushed the equity or the value of the properties up. And, several years later, I realized that equity proved to be quite an important tool portfolio later. So doing these multiplexing properties and investing in multi-unit properties has been quite rewarding from an appreciation and a cash flow standpoint. So those were the first 2 types of properties I invested in: student rentals, high cash flow; multi-unit, diversifies your risk and allows you to improve on the value of the property and create equity. The third type of property that I started getting into were vacation rentals. I'm currently doing a show actually about vacation rentals, which will launch in late winter, early spring. So, I'll be showing people some of the examples of how we can generate opportunity through vacation rentals. And into my early 30s, I started to do vacation rental properties as the evolution of online bookings really, the technology caught up with the opportunity. And now, we can rent vacation rentals up to a year in advance. It's fairly affordable to post them. You've got an international audience. The system really is what created the opportunity, because 20 years ago, to rent a vacation property was tricky. Taking out classified ads in the newspaper is a bit of a gamble. But today, vacation rental market is highly profitable. Again, there's a lot of turnover. There's some work involved, but we're doing a show about it. And if people are interested in that, they're going to love this show, because folks are making a killing in the vacation rental market.
I can't wait to see that. Yeah.
Awesome.
Yeah. So that'll be airing in the spring, and it really, it's kind of fun too. It allows people to own a vacation property and rent it to create cash flow when they're not using it, right?
Absolutely. And then there's one more.
One more, yeah. So the fourth one, which is in line with the vacation idea, is the short-term executive market. We tend to be seeing a lot of young folks moving around a lot. They're renting month by month, or even we have few people renting a few weeks at a time. A lot of my staff, we travel. Like I'll be in Montreal next weekend, as you know, and I take my team with me. So there'll be 20 of us there in Montreal, training people, working. And you'd be amazed at a lot of my young staff who have properties in the city. They'll Airbnb their apartment for 3 days while we're on the road, and they'll make $600-700 for the weekend while they're away renting their place to short-term executive rentals. City. So it's really quite interesting to to kind of look at the opportunity for young folks, especially who are struggling to afford a place. We know the housing market has been aggressive. Even in Montreal, the last few years has been really quite positive and quite amazing. And we've been telling folks that, in markets like Vancouver and Toronto, it's almost unattainable for first-time buyers to get into the market unless they're willing to do something like a short-term rental when they're not there, or even Airbnb-ing an extra room in a condo or in an apartment. So the executive market is again, it's short-term renting. So the beauty is the rules are different when you're doing short-term rentals. It gives you more flexibility. You can play with your price point. You're not signing people onto long-term leases, but you do have to do your homework when it comes to short-term rentals, because a lot of buildings now and even certain municipalities in certain areas are restricting the terms in which you can rent your property on a short-term basis.
As we see that in Montreal, we're running quickly out of time, but you have your wealth tour coming up. You want to tell us a little bit about that as well?
Yeah, so I'll be in Montreal on Friday and Saturday. I honestly believe that our Friday event is full at the moment, but Scott Live in Montreal should get you to the landing page. We offer this event for free. So I'm coming. It's a 2-hour seminar where I will basically let people in on some of the, some of the strategies that I talked about today, going a little more in depth on how to apply them, what the profit market looks like for real estate investors. So I'd have a look at Saturday. We have 2 events on Saturday, one at 10 a.m., one at 2 p.m., both in Montreal, and we have a great team there to make sure we get people's questions answered and just show them, the opportunities. We have a real estate investing network across the country, so we've been doing this for years.
Very, very cool. Thank you for being on air with us, Scott. Much appreciated. Up next, we're going to be looking at what factors to consider before buying an investment property.
The Real Estate Show is brought to you by Northeast Mortgages.
Hi guys, how did you guys enjoy that? So much info in like 10 minutes, right?
Absolutely.
Amazing. You know what? I really like what Scott said about student. He's actually given, every time we do any of these summits, honestly, you learn. And I really like the way that he explained how his deal changed. And I think that's important, because people think, again, there's only one way to do it. But look at how he started with one thing, and then he progressed to something else. You heard him. So what he's teaching, this is what I love also, he's doing.
Yeah.
So now he's progressing to vacation properties. That's actually something that I've thought of a lot, because, I keep saying, oh, maybe I'll buy a cottage. But for me, it's like, I know I'm not going to use it the whole time, but if I can make money out of it, and we know that Quebec, this area, there's so much cottage country here, right?
Absolutely.
So that's like such a good opportunity. Yeah. If ever you were thinking of, like myself, maybe I'll get a cottage.
Yeah, you know what, I agree, and it's one of these things where you have to be, as an investor in general, okay, so it doesn't matter whether you're, buying stocks, bonds, mutual funds,
Exactly.
It's not one investment that's going to actually yield a specific type of return for you over a specific time.
There's not one answer.
You have to adapt yourself, and you have to change. And
but also
this is
you
what
have
we
to
do.
work.
But you have to have your finger on the pulse of
But you have to be willing to do a bit of work.
And
I don't know if you guys heard what Scott said. He didn't, harp on it a lot, but he said, you want to do student housing, it's going to give you good results, but you're going to have to be you have to be willing to put in the work. Right?
Yeah.
You have to start with something that does require a bit of work, whether it's sweat equity, whether it's with students, whether it's with a vacation, then it's going to require a little bit of work at the beginning, right?
Absolutely. 100%.
So I think we do meet a lot of investors, Terry, yourself and I, in these groups that say, oh, we want cash flow. You're not going to just get a property that's cash flowing. That's the goal, right?
Absolutely.
But you're not going to just pick up a property, guys, that's cash flowing right away. You might have to do something to make it cash flow. Do you agree?
1,000,000%. Forget about it's
because he's talking about cash flow, and I don't know if you're reading between the lines. There's work to be put in.
Yeah, and it's
research, work. You have to have guts to go to an area that maybe is not up and coming yet. That's going to be up and coming.
Yeah, and I'm just gonna do something here, okay? Because I'm just gonna turn the camera, because Marav came and she actually wrote down something, which most of us, Marav herself as well is a real estate investor, number one. Number two, she's been running the business with me forever, okay, so she knows the ins and outs of real estate really well, and she came and she wrote something down, don't forget to mention this, but you know what, I don't think it should be me that should be saying it, it should actually be her. So why don't you come over here,
you should be
grab
saying
the
it.
hot seat, okay, you can talk
I want to
about-
know what she wrote down. What'd she write? What'd she write?
I wrote, why is Eleni wearing that today? No.
What'd you write?
I love that song.
Okay.
I wrote,
Yes. I'm listening.
that to be a real estate investor, you have to know how to pull the trigger. You can't be stuck in analysis paralysis, which we
And listen to professionals.
And listen to the right people. Listen to the right people.
Okay, tell me more about analysis paralysis.
We see
Guys, listen up.
so many people who want to become real estate investors, and it takes them so long before they meet every opportunity that comes up. They're overanalyzing and they're thinking, and I'm not sure, and this and that. It's gone. It's gone. My son, who's 19, just bought his first investment property.
Yeah, amazing.
He's going to notary this week. And honestly, it was like, this is a good opportunity, go for it. You saved up a down payment, don't think about it, just do it.
Yeah.
It was like a spur of the moment.
I agree, because when you talk to the people that have had results and do well, it seems easy. And it sounds easy. But it's not. You have to have, if you have the right mentality and the mindset.
And at the end of the day, it's almost, I'm not saying it's a sure thing, real estate, but it's almost a sure thing. Because honestly,
It's like food.
compared to buying, if you tell me right now there's a stock that you could buy that will double, it's not necessarily a sure thing in the sense of, if tomorrow it goes down to zero, I lost all my money. But if that same $10,000, I put it to buy a property, and I'm saying 10,000 because I'm assuming, let's say you buy something small for 200,000, you plan on living in it while you're fixing it up, and then you rent it out. $10,000 in the stock market or $10,000 in real estate will give you much, like huge, like the results are completely different, and the risk is different. You know,
I think people are always going to need a place to live. We're seeing the prices go up. We see demand is up. For me, I don't see how you can lose with real estate. It's like grocery stores. They're not going to go out of business. Real estate. Everybody needs a place to live, guys. So even if you're starting with one small property, go with your budget and go with your. People have to be ready to do things.
Yeah.
I've seen people 2-3 years waiting to invest. The prices have gone up every year you wait. You're missing opportunities.
absolutely.
But it has to be, I have to say, it has to be the right one for you. Because there's so many different.
With emotions, you're never going to buy.
No, but it has to fit your investor style.
Yeah.
Right? Like myself, we when we were young, we loved to renovate. We loved it. Now we've slowed down. And now I don't see myself doing that. Kind of like Scott, it evolves.
Yeah,
so
like
now I
us, we had
sold
bought
those properties.
We had bought a repo in Lachine,
That's it.
and we renovated.
Now I'm looking at, maybe I'll do a bit, bigger units, more units, or a vacation property. I also like the student housing.
Yeah.
I really like. I
like the executive condos also, where you rent it out furnished. But again, it's more work. Short-term rental is more revenue.
Because you have more management to
but
take.
more work. You
But
have
more
to
revenues,
clean up
yes.
in between the tenants. You have to show it constantly. It's like more turnover.
Well, you can put somebody in place, but you have to manage that, right? Which is fine. So there is some work to do, guys.
I always say there's no shortcut. Everything comes at a price.
But it's worth it.
It is worth it. Honestly, big moguls that you see out there, they've made their fortunes with real estate.
Exactly.
You know? You want to write the link? You want to write the link, Eleni?
Oh, sure. I'll post it on the Facebook page, guys. Let's post it. There we go.
Oh no, blocked batteries. Can you guys hear this?
Get checked and take charge.
Talk to your doctor.
Learn
Get
more.
checked.
at
Are we still on?
cholesterol 911.
Oh,
You know
also,
what they need
people
to
should
do?
send us their questions if they have questions.
Text that came in, so
Okay.
I'm gonna go to the stuff that's on the text that came in, and then is there anything that came in online?
I don't see anything.
Stay on this page.
She's not saying the same stuff as you, by the way.
I know that.
When you share, each person shared.
Yeah, I go to
You
his
each
page
get your
also.
own
Yeah.
questions. Oh, start 'em.
Thank you for joining us on the Real Estate Show. Today we're talking about investing in Montreal real estate. You can always join the conversation by calling in at 514-790-0800 or texting in at 514-800, just like we had a couple of text in. One was actually in a comment towards Scott's comment that he made, and they say student rentals sound risky. Students in general tend not to care about the places they live in. I disagree. Okay, we cannot we cannot generalize. Mom and daddy come in. So if you have students that are coming in and they have no credit when they're, getting into your apartment, and they have, nothing to lose to destroy the place, get the parents to co-sign on the lease.
Exactly.
It's as simple as that, and then all of a sudden the parents are now responsible. The other thing that I like to do when I end up having students renting the place, I'm going to inspect the place before. Well, I do this anyways in general when I rent out a unit. So I do a walkthrough of the unit with the tenant. So we have a checklist. We go, okay, water works, this works. I know it sounds silly, but water works. There's no holes in the walls. The windows are good. Everything is good. Now, from this, if something happens, I don't care if it's a screen that breaks, you are 100% responsible. Do not call me and tell me I have no screen on my window, because
I actually prefer that they call me.
At their expense.
Yeah.
Right? I had, and this was not students, I had a lady one time, her kid used to flush things down the toilet all the time.
Yeah, it's
combs, toothbrushes, G.I. Joes. There was all kinds of stuff that I would pull out of that toilet. And she would call every couple of weeks and say, the toilet's clogged, come in, unclog it. So the first time I went and unclogged it, I pulled out, an action figure. The second time I pulled out something else. And then by the third time, I was like, listen, man, I'm pulling out stuff that your kid is putting in here. Keep the lid down. The next time, here's the phone number of a plumber. You call them and you get them to come and do it.
Yeah.
And it's at your expense. And you know what? There was never anything that fell in that toilet again. Amazing.
Well, right? And so there is going to be some risk. It's the same way you invest in mutual funds.
Agreed.
What I like about investing in real estate is that you have the control and you can put things in place, which is what you're just explaining. And if you think it's risky to have tenants, I'm sorry to say, then real estate investment is not for you.
Yeah.
In that sense, right?
Sure.
So if your risk level, so what's your definition of risk?
Exactly.
Right.
And the thing is that this is what I love about real estate, and this is why I've built my investment portfolio revolving around real. Yes, I own RRSPs. Yes, I have a TFSA. Yes, I have savings in places that are more liquid than real estate, so to speak. Okay, but if you look at what my net worth is derived from, it's derived from real estate.
Because real estate goes up.
Exactly.
And when real estate goes up, your property values go up. Scott mentioned equity. When you have equity in your property, you can go and get to the bank, a lender.
Yep.
You can borrow on that equity and then keep building your portfolio.
Exactly.
So there's a lot of different ways to make money with real estate. Again, not just one. And it is going to depend on what your goal is. And that's what we're going to get into, right?
100%. This actually lines up the next question, next texter that we have here. Could you comment on condo resale prices in downtown Montreal going into 2020? So where do you see it? What's happening?
Honestly, people know before that I've never been a big fan of condos in Montreal. Why? Because historically they did not go up in value. They were actually in the negative. In the last 2 years, they've gone up, more demand for condos. They've gone up about 5 to 7% in the past year.
Wow.
About 5%, let's say, okay, on average. It just jumped up. So the trend is going to be the same thing for the next year going forward. So if you buy a condo, let's say you hold it, you're looking at about 5 to 6%, maybe 7% for the next year. We're talking about downtown Montreal now. Because again, the demand is there, right?
Absolutely. So how important would you say it is to actually have a realtor on your side who knows investment properties, that knows what they're doing when it comes to buying and selling investment properties?
Listen, even Scott said it. When he first started, he was renting, and it's an agent who told him, who was an investment-oriented agent, who said, hey, why are you going to spend $1,000 on rent when you can take that money, pay for a mortgage, pay for your taxes, and then you're going to own the asset. It's going to grow in value, and then you're going to also benefit, with the appreciation and the equity. So you do have to work with somebody that can work with you and figure out, okay, with your budget, what can we get? What can we get you into? A realtor is going to be really, attuned with what's happening to the market, in the market. And again, different types of investments, right? So they can help you with that.
We have another text popped in. I have 50. You want to take this money and you want to buy in a very poshy kind of neighborhood. Well, you know what? Maybe it's not going to give you a proper cash flow. But if you go into maybe a less desirable neighborhood that has solid rents coming in, that might actually work. You have to sit with a mortgage broker who knows what they're doing so that you can properly calculate the yields of your investment. Remember, the least amount that you're going to put down versus the more that you're going to rents that you're going to get will.
Traffic Center.
Water accumulation definitely is a factor in your ride, so drive carefully and watch out. Notably on the westbound Metropolitan, eastbound Metropolitan, we do typically see water accumulation when the weather is like this, so drive carefully.
Yeah, exactly.
Yeah. It's all good.
This cash flow, people, is going to kill me, this cash flow.
Why is it going to kill you?
Because I feel like people feel like they're just going to buy properties and they're going to cash flow automatically. Do you see what I'm saying?
Nowadays it is harder to cash flow, but you have to look at the big picture.
It's not harder to cash flow, and I'm going to tell you why it's not harder. Because people are stuck on wanting to buy specific types of properties. Okay, and that's it. Okay,
Could be.
You want to buy. People are. I only want condos because I don't want to. No, there's condos, there's duplexes, there's single-family homes, there's triplexes, there's fourplexes.
Yeah.
There's freaking Airbnb. There's, like Scott said,
there's condo hotels.
So you have to look at everything.
A ton of types of investments that you can do in real estate that will ultimately determine your yield and what you're going to be getting.
Maybe you're right. Maybe that's the problem.
And you don't have to necessarily buy where it's already gone up. The problem is that humans, we have this herd mentality, right?
Yes.
I don't know, Griffintown is up and coming. If it's up and coming, it means that it has come and gone. Remember that. Because when you hear about a stock or a mutual fund that's really performing well, it's performed well. It's not performing well. Okay? Remember, when you're looking at the AMF or you're looking at the Canadian securities or anything like that, what do they specifically say? Future results are not necessarily indicative of past performance. Okay? Future results are not necessarily indicative of past performance. Just because your neighbor bought a property in Griffintown and he had an awesome ride with it, it doesn't mean that you're going to have one. Just because I bought a property in Hochelaga Maisonneuve in December of 2000 doesn't mean that you're going to have a positive experience.
What I want to answer this texter about cash flow is what you're saying, is that it's not what you think it is. It's not going to just be served to you automatically. You're not going to just go on Centris, I'm sorry, and find a cash positive property. You're going to have to look outside the box.
Yeah.
You might also have to find a property where you see the opportunity to create the cash flow.
Yeah.
It's not going to just be given to you.
Absolutely. No, I agree. 1,000%.
You're good with this one?
Yeah. Absolutely. Yeah.
I need you people to stay on point here.
Yeah, sorry, he was reading the text and I was just following the text.
By the way, I had just in correlation with.
But you went to 5 already, yeah? Go
yeah,
ahead.
he had no choice.
Yeah, let's go to 4.
Yeah.
Okay.
I thought we talked about that. We did. Okay.
No, we didn't.
What were we going to say, Tim?
So I'll go to 4 and 7.
Okay, so Andrew has a very, very good question because he wants to know what I have. So he writes on Facebook, he writes, I might have missed it, but can you give us a quick overview of your portfolios, what you currently own, have owned in the past? So the first property that I bought, I was 24 years old. I bought a fourplex in Hochelaga Maisonneuve. I paid $107,000 for it. I lived in the property, and it basically my tenants paid for me to live. Then from that, I ended up refinancing it, ended up buying a duplex in Lachine. So I've scattered my portfolio across Montreal. I have some properties in Myland. I have some properties up north in Dollard as well. I do land banking. Okay, a lot of land in certain areas up north, which I'm looking to develop, not right now. I bought the land now when land was cheap, or actually I bought it a few years ago when land was cheap,
Yeah.
and then when the market opens itself up over there, I go in, I build, right? So if that's basically my portfolio in a nutshell, okay. What about yourself?
Well, myself, I mean, we bought a duplex for $105,000, basically, and then lived in it, flipped it, made triple more when we sold it.
Yeah.
And from that, we were able to move on.
Estate and mortgaging team, Terry Kilakos and Helen Akrivos on CJAD 800.
Thanks for tuning in. You're listening to the Real Estate Show on CJAD 800. Today we're looking at investing in real estate, and the texts and the comments are coming in fast and furious, especially online, where we had a some really interesting texts that came in, one of which I answered online, and he followed up by saying, you can't buy a good deal, you have to make it. Normally you would have to make the good deal, and I could not agree with that texter.
That's what I wanted to say about the cash flow.
Chapeau to you, buddy. Yeah. Absolutely.
That's just quickly what I wanted to say about cash flow before we went to break, was that you're not necessarily going to find properties that are cash flowing automatically. You have to find opportunities.
That's
and it's
right.
not in one place. And so, Terry, you owned different type of properties. We were talking during the break. How do you know when something is good to buy? And is it one thing? Is it like one size fits all?
No, it's definitely not one size fits all. 100% not. For me, what I like to do is I want to make money going in. So I have this one simple rule. I always want to make money going in. I want to have a positive cash flow if possible, but at least there's got to be profit, okay? And let me define profit to you. When you're looking at a property, there is what's called a principal recapture, okay? Which means that every mortgage payment that you're making, there's a portion of it that's principal and there's a portion of it that's interest. Mm-hmm. The portion that's principal belongs to you. It is included in your yield, okay? It's not necessarily always money that's going into your pocket. And for those of you that are online and are watching me right now, I'm tapping on my pocket, okay? I had an old investor. He used to say, it's, what did he say? It was a hip bank. Anyways, I don't remember. It was a funny thing that he used to say. But you always want to find something where you're making money going in. Or you could make the money going in sooner than later, if that makes...
Yeah, that's where you can buy something, let's say, with a unit that's empty, go in, renovate it, increase the value within a couple of months.
Absolutely.
Increase the rent, increase the value.
Absolutely. We have Rob on the line from Saint Lazare, has a question about wanting to buy and where to start. Hey, Rob.
Yeah, hi. Hi, how are you?
Absolutely great.
Okay, I just had a couple of questions. Me and
Sure.
my wife were thinking about buying investment property.
Mm-hmm.
At first, I was thinking condos, but then I also heard about like, when they're just starting to build a condo,
Yep.
and you like buy one and you don't pay any payments, you just put the down payment, and then once it comes, when it's finished, then you can sell it or whatever. Or somebody else mentioned buy as many doors as you can, like a triplex, or what would you recommend if you're just starting out?
For me, I always want to go big, bigger is better. If you want to buy triplex, fourplex, and you're able to, that's what I would go. Otherwise, you can go even bigger than that. You can go 5+ doors, and that's
Okay.
that's a different market, but you could do that as well.
So doors are the thing, like buy
for me,
doors is,
my
okay,
opinion.
That's right.
Yeah.
Okay, and also I'm thinking like Vaudreuil, this area would be cheaper than on island, wouldn't it?
Yes, absolutely.
Even further off island, I would say. Vaudreuil at this point has become like part of the island and is also going up even further off island.
Right,
Yeah.
people have to live, People need to live.
My
Okay, thanks a lot.
No
Right?
problem. I'll just say this. My advice to you, when you want to invest in real estate, pick up the phone, call the municipalities, ask them if they're doing any types of subventions in certain areas. And then when you find those areas that the municipalities are actually making subventions, find out what's going in, see if there's any projects, and then buy around there. So that's how you're going to get in before the curve goes up.
Okay, because then property values around that would go up, you mean, right?
Exactly.
Okay.
Hope I answered your question, Rob.
Yeah, very good. Thanks a lot.
Absolutely. And Rob can give us a call also at the office. And, this is what we specialize in. We'll sit down with him on the mortgage side. We'll look at his numbers. We'll tell him what he's able to qualify for. And then we push them over to your side, and you take care of
Yeah.
everything else on the real estate side.
I really like what you just said about sort of not following the herd, right? So looking at areas that are not up and coming. So definitely, if somebody's, for example, wants to buy in the plateau, what would you tell them if somebody's saying, "Well, I want to buy in this particular area because I know the plateau is hot." What would you tell them?
Okay, you're buying a triplex. You want to live in the triplex. You want some rents to supplement your income. Sure, why not? Sorry, you want the rents coming in, supplementing your income, paying for you to live a little bit. You want to buy in Plateau, go for it. You want to buy in my land, you want to buy in Outremont, doesn't matter. Go for it.
Should
Knock
people be
yourself
stuck
out.
on a particular area or
No,
property? Right?
if you're buying for investment purposes, do not necessarily follow the herd. Go buy in
Exactly.
Hochelaga, go buy in Pointe-aux-Trembles, go buy in Vaudreuil, go buy
Off island.
Off island. What
Yeah.
was the one that
South
you always
Shore.
say?
Sorel. Sorel is in the South Shore.
Yeah.
And it's exactly what you were saying.
Absolutely.
Follow the news. See where companies and new developments are setting up.
Yeah.
Check it out.
There's
homework to be done. This is the thing that also I want to talk about cash flow and results. The people who get results, it's because they do their homework. They go, they work with a team that can help them, and they look at everything. They don't just follow the herd and say, "Oh, I'm going to buy a new construction." Maybe, but where are you going to buy it? Why are you going to buy it?
During the news, we had a couple of questions about, analysis paralysis. My wife brought it up where she was saying, people get stuck on overanalyzing properties as opposed to, actually pulling the trigger.
So what should you focus on?
So what you need to do is you need to actually go and meet with the professionals, okay, the mortgage brokers, the realtors that know what they're talking about. Stay away from those realtors that are going to push you towards a specific type of property. Condo works for you. Your realtor should tell you it works for you, but condo is not necessarily an investment property.
It depends, right?
It depends.
I mean, we want to increase our passive, income. We want to increase our net worth, right?
If you want to increase your passive income, rarely do the condos will increase passive revenues. Okay?
I tend to agree with you.
But
there's furnished condos. We've seen some clients take, higher end furnished condos, and those actually will cash flow.
Absolutely. Eleni.
Yep.
We have to have a part 2 to this show.
We do.
Which we're going to do in a couple of weeks.
Maybe when we come back from the summit.
Absolutely.
And check out scottliveinmontreal.ca for tickets.
.ca. You can go get tickets for next week's wealth tour that he's in. If people want to get a hold of you, Eleni, how do they get a hold of you?
They can call the office line 514-716-6188.
And if you want to reach us on the mortgage side, it's 514-680-4674. You've been listening to The Real Estate Show on CJAD. Thank you for listening, everyone.
The opinions expressed in the preceding program were provided for general information purposes only and should not be construed as advice from CJAD.
Yeah, it's just really important to follow. Guys, I love you. Have a blessed week.
Bye, guys.
If you guys have any questions during the week, feel free to call us. Again, 514-680-4674. And if you haven't done so already, just take a second. Go online to newsonthego.ca, which is our YouTube channel. So all these shows that we do actually live on YouTube. So you can watch all the previous shows. We're going to actually record a couple of bonus shows this week while we're at the Investor Summit that we have in Niagara Falls.